So on January 4th, 2026, the Russian industrial billionaire Oleg Deripaska posts something on his Telegram channel that really turns heads. And look, this wasn't just another market forecast. He laid out what sounds like an ultimatum, a really dire warning about a geopolitical siege that he says is already happening. So let's dig in and unpack what this could mean for all of us. And this right here. This is the heart of his message. For Deripaska, this isn't just about who sells more barrels of oil. No, this is about a fundamental shift in who controls global energy. He's pointing to a move that he thinks could completely redefine the next decade. Notice he uses the words control and more than half. That's a huge statement.
So what's really going on here? What's the hidden message from Russia's aluminum king? Is he just complaining? Is he making a bold prediction? Or is it something else entirely? Let's try to decode this thing, piece by piece.
Okay, so the first part of Deripaska's theory revolves around this grand strategy he's dubbed Fortress Americas. The idea is that the United States is systematically and very quietly building a geopolitical chokehold on the world's energy supply, basically shifting the center of gravity away from places like OPEC and Russia for good.
He breaks this strategy down into two key moves. First, he says, you have Guyana. Its recent oil boom is pretty much a done deal. It's already a strategic asset for American interests. But the real endgame, the big prize, is Venezuela. I mean, we're talking about the world's largest proven oil reserves. So according to Deripaska, the U.S. pressure on Venezuela isn't just random political noise. It's the final move in a chess game to lock down the entire hemisphere's energy.
And it all comes down to this one number, $50. Deripaska believes the ultimate goal of this Fortress Americas strategy is to flood the market with so much oil that the price for Russia's crude gets pinned at or even below $50 a barrel. And this chart really shows you exactly why that number is so critical. See, at $80 a barrel, the Russian state is fine. The budget works, the military gets funded, social programs are paid for. But at $50 a barrel, the whole thing blows up. You're looking at a catastrophic deficit. So from where he's sitting, this isn't just an economic headache. It's a full-blown existential threat. But here's where it gets really clever. He argues this whole strategy has a powerful dual purpose. It's designed to solve two of America's biggest problems at the same time, and in doing so, it would create a really rare, really weird situation in the global markets.
He calls it the two birds with one stone theory. So, bird number one, you crush Russia's budget by unleashing a tidal wave of cheap oil from the Americas. But here's bird number two. At the same time, you weaken the US dollar on purpose to devalue America's own massive national debt. I mean, think about it, right? When your currency is worth less, that mountain of debt you owe suddenly becomes a whole lot smaller and easier to manage.
And this is what makes his prediction an absolute bombshell for any investor. Normally, a weak dollar means higher oil prices. They're like a seesaw. When one goes down, the other goes up. But in Deripaska's wild scenario, they both crash together. Oil crashes because of all that new supply, and the dollar crashes because of deliberate policy. This is the kind of event that would catch almost everyone in the market completely by surprise. But he doesn't just point the finger at the United States. He actually saves some of his sharpest criticism for his own country, arguing that Russia's central bank is making a huge mistake and basically leaving the country wide open to this kind of attack. He uses this incredible, very Russian idiom to make his point. It just perfectly captures his frustration with what he sees as these stubborn, totally self-defeating policies coming from right inside his own government.
So what on earth does he mean by freezing our ears off? Well, the idiom comes from the idea of a stubborn kid who refuses to wear a hat in the freezing cold, just to defy his mom. The only one who gets hurt, of course, is the kid himself. Deripaska is saying that's exactly what Russia is doing. By keeping the ruble artificially strong just to prove a point to the West, they're actually strangling their own economy and walking right into the trap.
Okay, so if the West is setting a trap and Russia is walking right into it, what's the way out? Well, Deripaska does offer a solution. He proposes an escape route that involves a huge pivot away from Russia's traditional partners. He gives it this really cool historical name, the Afanasy Nikitin Road. It's a nod to this 15th century Russian merchant who traveled to India. But what he's really talking about today is the International North-South Transport Corridor. He sees this route connecting Russia to India through Iran as pretty much the only way for the country to survive if its access to Western markets is cut off. All right, so let's get down to brass tacks. What's the bottom line for an investor? If Deripaska's whole perfect storm theory is right, it points to some very specific, very big moves in the market for 2026. So here's how the whole theory looks as a trade. You'd be bearish on crude oil, right? You'd be looking for it to test that critical $50 level. But at the same time, because the US would supposedly be weakening its own currency, you'd be super bullish on hard assets like gold and silver. They would decouple from oil. Their prices would go in the complete opposite direction as people rush to find a safe place to put their money. And he even gives us a visual signal to watch for. He calls it the alligator mouth. Just picture it on a chart. The price of crude oil forms the bottom jaw, crashing downwards. At the same time, the price of gold, and maybe other currencies like the euro, forms the top jaw, shooting upwards. If you see that alligator mouth pattern starting to open up, well, then the theory is playing out in real time. Which brings us to our final and maybe most important question. What exactly are we looking at here? What is this message from one of Russia's most powerful men? Is it a genuine warning to fellow investors? A calculated prediction based on things he knows that we don't? Or is it a veiled threat? A signal of how Russia might choose to react if this economic siege goes on? That is the multi-billion-dollar question he's left for all of us to think about.